It has been 12 months since British Airways and American Airlines submitted their application to merge. If approved, it would allow the two airlines to operate in tandem, code-sharing and coordinating routes and revenues across the Atlantic. But Virgin opposes the plan, calling it anti-competitive, saying it will lead to higher fares. Earlier today, Bloomberg's Rashad Salamat spoke with the CEO of Virgin Atlantic, Steve Ridgway, to see why he is dead set against the deal.
It's precisely that. It's anti-competitive. If you look at how important the UK market is, it's the largest market from Europe to the US. Heathrow dominates that. Heathrow is full. If BA and AA are allowed to get bigger, it's going to be even harder to compete. They will have 80% of the flights to Boston, 70% of the flights to Chicago, even a huge market like JFK, over 60%. Those are huge dominant levels. And the regulators need to be vigilant. Just because we're going through tough times isn't a reason to nod this through. So we're out there campaigning, and we'll continue to campaign both in Brussels and Washington that this needs to be looked at and stopped.
But Heathrow's no different to, let's say, Sky Team, which has, what, something like 70% of Charles de Gaulle. We've got Star Alliance, 80% control in Frankfurt. I don't see you squealing about them.
But the fact is that today, before anything happens with American Airlines, BA is already bigger than the whole of Sky Team in Paris. It's already bigger than the whole of Star in Frankfurt. It's a different nature of the market, and it's that point that this monopoly gets even larger, even more dominant. And that's not in the interests, I think, of the UK or in the interests of consumers.
But, you know, Stephen, at the same time, I mean, you know, they may be monopolistic, but, you know, it should be about competition. You should produce a better product to compete with them. And, I mean, fares are roughly equal. I mean, you've even been involved with that cartel and fixing the fuel surcharges as well. So you work with them to some extent.
Well, we've always competed very hard. We've had to compete on product. That's where we've laid out our stall for over 25 years. So we're not frightened of competition. We're very happy to compete, but it has to be fair competition, and we have to have the ability to be able to grow. We're not against consolidation. We may well be part of that. But if we were going to do it, it would be to become a bit larger, to compete more effectively, not to become over-dominant.
And Mr. Ridgway explains that airline consolidation isn't a bad thing. It all depends on the size and scale of the alliance. Yet, if British Airways wins antitrust approval for their agreement, Virgin Atlantic would consider cooperation with Lufthansa. Other news now, Southwest Airlines has lost its bid to buy Frontier Airlines. The two discount carriers were at an impasse between the pilots over pilot seniority. The issue is crucial to pilots because it sets pay, benefits, and schedules. Southwest, whose pilots are the best paid among U.S. peers flying Boeing 737s, said its offer depended on an accord between its pilots and Frontier's. They reported Frontier's union rejected being given the lowest seniority. So who won the bid? Republic Airways, an operator of regional flights for larger airlines, was declared the winner with a $108.8 million offer. Shares of Republic rose the most since June on the news. Republic right now up 2.5% at $6.41.